Okay, good evening, everyone. Welcome to tonight's webinar and welcome to level 1 as well. We've all made it through. Amazing effort by the whole of New Zealand and especially everyone here in Christchurch. So hope everyone's level 1 is treating you well. My name's Ollie. I'm going to be the host for this evening and I look after Simon's marketing and media. And the reason I've been invited to host tonight is because I'm perhaps in the same bracket as many of you, looking for my first property potentially this year, and also my parents are selling this year as well, so a nice variety of situations going on. Hoping to learn a lot from the 3 guests we have tonight as well. So tonight's going to be a very open discussion. We're going to talk to the 3 guests we've got here. We're going to open up some polls. We're going to try and encourage some questions. So we have had an overwhelming amount of questions actually in the last couple of weeks. So thanks to everyone for sending them through. You are welcome to send through some more as we're talking, and we'll try and answer them. If we don't get around to answering all of them, we'll send an email. I'll ask the guys for some of their feedback and we'll take it from there. So let's get it started and introduce everyone tonight. So we've got Simon Maule from Loan Market Metro. He's a mortgage advisor with over 20 years of experience. Simon provides a wealth of knowledge and experience to any clients across Christchurch in particular, as well as New Zealand. Simon and his team have seen firsthand how difficult and frustrating the process of borrowing can be for clients, and especially when dealing with clients directly. That's why he places great importance on client satisfaction and outcome. Simon's dedicated to ensuring clients understand the market, opportunities that are available, placing him as the perfect guest tonight to cover any financial discussions we might have. So thanks for joining us, Simon.
Thanks, Ollie. Look forward to it.
Also got Rebecca Toone, who's on the right down below there, and having gained elite status within Ray White Group, Rebecca operates within the top 2% of Ray White agents internationally. Selling real estate since 2009, she's an honest straight shooter regarded for her strong negotiation skills, warm personality, and personal integrity. Rebecca's role is solely to gather as many buyers as possible to create competition and achieve a premium price for your property. Welcome, Rebecca.
Good evening.
To Rebecca's right, or your left on the screen, is Richard. He is a genuine, approachable, natural sort of guy. Through his clients, he provides a lot of outcomes and their desired interests. He has no effort to deliver, and after completing a bachelor's degree in commerce and business management, Richard's decided to take that profession towards real estate, and his results have spoken for themselves over the last 10 years. His attention to detail and economic knowledge is what sets him apart and provides his clients with the highest value. So Richard believes his clients should be informed at every step of the process. Pretty much hence one of the reasons he jumped at the opportunity to join us this evening. So thanks for being here, Richard.
Thank you. Good to be here.
All right, so as I said earlier, guys, we are going to run some polls. We're going to try and get some questions happening. Depending on whether you're watching this on your laptop or your phone, you will have an option to chat away.
And Ollie's frozen.
Am I frozen? You guys hear me okay?
Yes, I can now.
All right, so I'll start again. If you guys do have any questions, you can use the panel on your phone or your desktop computer, and you can ask some questions through there. They are anonymous if you want them to be, so no judgments there. And yeah, like I said, if we can't get through to any, then we will try and cover them after the webinar through email. So I thought this evening we would start with this graph here. So Simon, if you don't mind, I wanted to throw this at you first. Our last webinar together, you walked through the viewers through this graph in particular, and I think it's actually a really good place to start. Can you briefly walk us through what it means for level 1 and post-COVID, and perhaps help set the scene?
Thanks, Ollie. Look, the common question we get in this industry, I'm sure Rebecca and Richard get it as well, is when's the right time to buy a property? And it's a really difficult question to answer because none of us can accurately predict the future. However, if we rely on historical trends to give us some insight, then this is what this graph is really showing. So if you look at New Zealand median prices for property over the last 25 years, starting in 1992, if you look at the trend line, if you ran a ruler across that, the trend line is gradual and upward. Throughout that graph, there is some dips, and we've circled one, which I'll talk to in a moment, but the trend line is upward in a gradual, steady state. So when's the right time to buy property? Well, if you look at that graph, it tells you any time is a good time as long as you hold long term. So if we look at 1992, the median house price was sitting just above 100, and property prices tend to double in value in New Zealand about every 12 years. So if we move 12 years ahead, 2004, that property median price is sitting above 200. So it's more than doubled in that 12-year time frame. And if you move another 12 years from 2004 to 2016, so it's moving from, say, 230,000 roughly in 2004 to sitting about 500,000 in 2016, again, it demonstrates it's doubled in value. So if you're using history to dictate what might happen with property, this graph tells you with the data that it should double every 12 years or 12 to 13 years. Now, that's not regionally based, so the west coast of New Zealand, it might not follow that trend, but this is New Zealand as a whole. Now, if you purchased a property, say, in 2008, just at the start of that circle, and then property prices dropped 8% in what we call the global financial crisis, which is that dip that it's highlighting, and you had to sell in 2009 because you lost your job, you would lose money on that property. So that wasn't good timing by you. However, if you purchased a property at 2008 and had a sustainable income and you stayed in that property until 2016, you've made significant capital gain. So it's all about making sure when you make a decision to buy property that you've considered the risks and you feel comfortable that you can hold that property for long term. Because history's told us by doing that, in New Zealand, you'll make money by simply owning a property, the value increasing. It's called capital gain. And so for that reason, when someone asks when's the right time to buy property, there really isn't a right time. I think the key risk to avoid is any strong inclination you might have that your income's likely to be affected and you could come under pressure to meeting your obligations and have to sell under a forced sale. That's not likely, and no one can predict all these things accurately anyway. But if you're comfortable with your position, then any time's a good time, and we'll talk a little bit more about that tonight.
Excellent. Thanks very much for walking us through that, Simon. I think there's quite a lot in that which will probably have already been answered tonight, especially around actually being able to buy property during a pandemic and whether that's the right thing to be doing. We've certainly had our fair share of issues over the last 10, 25 years. So really great that you're able to set the scene there. So appreciate that. Okay, what I'm going to do is stop the share and we're going to go straight into everyone's lovely faces here, and we're going to start talking about some of the questions that come through. So like I mentioned earlier, we had quite an overwhelming amount of questions, so we will try and get through them, and I'm going to direct them at everyone as we go. And like I said, if you are viewing this and you've got some questions that come up as the guys are speaking, do feel free to send them through. Okay, so Simon, I'm going to start with you again, just because this one seems quite relevant. Some may have seen, we ran a webinar together a few weeks back, and I guess one of the biggest questions that has come up over the last couple of days is, has there been any major changes with your clients? Things looking relatively stable at the banks and with loans at the moment?
Yeah, sure. Look, at the moment, following COVID, we're seeing policy changes. So policies are the rules and regulations that the bank put in front of our clients for them to meet the criteria to borrow money. It's changing almost daily, one bank or the other. So being agile and being informed of those changes is really valuable to pass on that information to our clients to give them the right solutions. I guess the key things that have happened over the last few weeks is we've seen interest rates continue to drop against expectations from earlier in the year. And it's probably been certain points as we entered COVID where we thought they had bottomed out and then they've dropped again. So it's pretty hard to get the crystal ball accurate at the moment as to where these rates are going to go, but they're going to be low for a long time. And we're seeing the rates, slowly dropping with certain banks over the last few weeks. In terms of policy changes, I don't want to get too detailed there because it can get a bit jargony or a bit confusing, but most banks, when you're in the low deposit space, so that's someone with less than 20% deposit, they've started to make that harder to qualify. So those people out there that have already got a pre-approval, my advice would, and potentially those people may have some concerns if they don't purchase before that approval expires. They'll be assessed under the new rules for some of these banks, which might rule them out. So, you know, happy to answer any questions offline about anyone that might be in that space right now. But certainly the banks are probably tightening credit rather than loosening it would be my key feedback.
Excellent, thanks for that. So, Richard, I might point this one to you to begin with as well. So, has there been any noticeable competition between buyers outside of Christchurch since level 2 and now level 1?
Yeah, look, thanks, Ollie. There's definitely been a lot of competition across the market here in Christchurch, and we are seeing our people outside of Christchurch coming back into the city. I have dealt with a few people from mainly Auckland, are the ones that I've been dealing with, coming down to Christchurch. Some of those are relocating due to work, but some of them are just making the decision, a lifestyle decision. They see Christchurch as being attractive. Obviously, we are comparatively very affordable. So we are seeing a bit of competition come in from those outside areas. Talking to agents around the country, a number of friends in that Auckland market operating as agents up there, and they're finding similar conditions with a lot of competition. So it sounds like the whole New Zealand market is performing really well in terms of the basis across New Zealand is low supply and still relatively high demand. So that keeps competing forces up. And I think the whole of New Zealand seems to be suffering from that at the moment.
Right, okay, thank you. Rebecca, you may have heard me earlier today talk about my parents looking for property, and they've actually had some challenges. Maybe it's the location, or maybe they're asking too much. But I'm keen for your feedback. We've got a question here regarding whether you've seen sellers significantly drop prices since March, since us going into lockdown. Has overall pricing for houses gone down, in your opinion?
No, not at all, Ollie. I think we've seen a rather exponential growth in the last 2 weeks. So coming out of COVID, we were a little unsure of what it was going to be like with the market. And as soon as we were able to show properties again, within level 4, we'd actually gathered and accrued a lot of buyers who in that time became very decisive, bold, doing their diligence. I mean, fortune favours the bold. So coming out of the start gate of COVID into the market, those buyers were ready. So what that meant for sellers is they had a wall of buyers to choose from. And, you know, with that supply and demand, we're probably selling twice what we're listing. And so for a seller, their prices, I would say, have probably increased. And we're definitely getting multi-offers. Yeah, right. Things are moving.
That's interesting, especially because my parents in particular have looked at a couple of options in how they should be selling, and you know, things like private sale, auction, bringing in sales experts like yourselves. What's your kind of preference that you're seeing people take at the moment? Is auction quite a popular thing?
Absolutely. I think we have to look back at pre-COVID days of a completely different market, because that's then and this is now. Post-COVID, properties that we're auctioning are having multiple bids, reaching reserve, and more. And I guess that method is really gathering buyers that are cashed up and putting buyer versus buyer, you know, rather than buyer versus seller. You know, some of this comes down to the agent and how skilled they are with auction, but far and away, any method that does not have a price is the way to go. You'll get the real market value come out.
Yeah, absolutely. Is there anything you wanted to add there, Richard, about that?
Yeah, I think, you know, our role is to bring a genuine buyer and a genuine seller together. So that's the most important thing. I think we always like to sit down with the seller and work through what their property is, the market conditions, and what their experiences are and comfort levels, and then decide and give them the advice to decide for themselves on what the best marketing method is. I mean, no matter how we market a property, every property sells. There's probably only two variables, and that's when that buyer or when that property will sell. We don't know that. and for exactly how much. But I think these methods, the auction method, although competition is not normally loved by buyers, because there might be many buyers on this webinar, I guess, it creates a really transparent forum for you to come into a room, the auction for instance, and actually you can see what the other buyers are bidding in front of you, and then make a really, sometimes a quick decision, but a decision, yes, I'm happy to bid that myself, or to keep going, or to not. Whereas some of the other methods are a little bit harder, especially in a multi-offer. We hear many buyers that are disappointed because they missed out because they just didn't know what they had to pay to get it. So, look, it's not an easy environment being a buyer, nor is it an easy time when you're selling. So I guess our role is to try to bring those two parties together and make it happen as best can be done.
And some buyers, sellers, are very keen to price property because they know what they want. And so they're very clear and decisive in that regard. And then it sends a message to buyers of, this is the range.
That sounds like my dad, actually. Yeah. He's very stern with his pricing. So, okay. So I guess the overall impression I'm getting is things are quite busy. Sounds like it hasn't really slowed down. Simon, what's that like from your perspective from, clients looking at maybe their first mortgage? Are you seeing an increase? Is it steady?
Yeah, we've had our busiest month of the year in May, probably 150% of normal volume in terms of inquiries to apply for home loans. So it's been flat stick. I think there's a few things driving that. Obviously the low interest rate. So, first home buyers perhaps in that $350,000 to $500,000 range, typically comparing what their mortgage repayments would be compared to their rent, and finding that mortgage repayments are comparable or possibly in some cases cheaper. The ability to start paying down their own debt instead of someone else's. And simply, there's probably, it was interesting listening to Richard and Rebecca there, there's possibly a misconception about what the market's doing based on the very negative media that we saw going into COVID, and some of the stories are still reporting information that we're not seeing out in the market. Now, we know that there sometimes can be a bounce. A lot of retailers will be talking about a bounce coming out of COVID, and there'll be a jump in activity, and I guess it's about whether that's sustained throughout the rest of the year or not. Again, everyone will have an opinion as to whether that's going to happen. No one knows for sure. But what I can say is we've had our busiest month, and that's what's flowing through to Rebecca and Richard in terms of open home attendancy and auction attendances, is those people that are seeing me and other brokers and other banks. There's a good pool of them, and they're all competing to buy a property. And if those buyers are thinking, gee, it's a good time because I've listened to the media and prices are going to be cheap, and it's going to be an opportunistic time to get in, that's not necessarily the case. Yes, there might be the odd property that might be a bargain, or there's no one else really interested. But generally what we hear is people paying a reasonably fair price.
Okay, fantastic. Guys, in terms of open homes on Sunday and how you're potentially going with showing around, are you seeing it as busy as what Simon is as well at the moment?
Absolutely. We were averaging pre-COVID, we probably had sort of between 5 and 10 viewings at a property in a weekend, a Saturday or Sunday. Now we're seeing sort of 10 to 15, 15 to 20, because buyers, I think, have had this time at home to make some really good decisions. They don't want to be stuck and beholden to somebody else. They want to create their own destiny. And so they're out there, they're buying. And to answer the question that's come up, a lot of first home buyers up to the 500 mark are out there, and we're here to really help them explain.
Right. Yeah, for sure. And so I guess the next kind of area we'll move on to then is how COVID may or may not have impacted everything. I had a question come through on the chat function actually just regarding what you're seeing as the buyers themselves. So in the increase in buyers, are you seeing more first home buyers, investors, or is it a mixture? And I know, Richard, you touched on out of town potential investors. So how does that look? I know it's quite a broad kind of question, I suppose, in terms of what you're seeing, but what advice would you give there?
Yeah, it's actually a really good question. It's quite interesting. when we go back probably a few years, we hadn't seen many investors in the market when the Reserve Bank sort of changed the LVR restrictions around investment property. Our largest group of investors are, I guess, what are called mum and dad or deemed mum and dad investors, which is all of us that go out and try to buy the investment property to create our retirement wealth fund, if you will, and retirement plan. Whereas they just went as soon as those LVR changes went. Whereas now we are definitely seeing, we're starting to see some at the start of this year, but definitely post-COVID. I think interest rates, and Simon would probably attest to that, interest rates being so low, historically low interest rates, you can't get much out of it from a term deposit in the bank, I guess. So, those people that do have those funds invested in the bank or sitting there not doing much, they're not earning much. There's an old adage, I guess, that we love, which is safe as houses. You get a good return. As Simon showed, that graph just keeps going up. So people are turning back to investment property and residential property as a really good retirement plan, investment plan, and growth. So we've definitely seen an increase, and I think that'll continue really with low interest rates.
I would agree, and I think that investors are perhaps hanging out, waiting and listening to the media and expecting that there might be a change, whereas the smart ones are getting in there now, putting their money into bricks and mortar. It's probably safer and a better growth than a compound interest in the bank. So,
but we're not biased, of course, Ollie.
Sure. Simon, is there anything you wanted to add to that from your perspective?
Yeah, look, a lot of what I'm seeing is first home buyers. We're seeing a lot of people looking to sell and then buy again in the same market. So, if you're buying and selling in the same market, there's no sort of disadvantage or advantage, so to speak, in terms of if prices go up or down, you're in the same market. So we're seeing a bit of that and a wee bit more investment. Also just had a few inquiries from Kiwis offshore that are looking to come home and buy, but not a lot. It's only a very small amount, but interesting to see some inquiries pick up post-COVID in that space as well. Investment, just a couple of things I didn't touch on when you talked about changes to policy. So the Reserve Bank has removed these, what we call LVR or loan to value ratio restrictions. So prior to the removal, most banks would only allow an investor to borrow up to 70% of the value of the investment property. There's been the removal of those restrictions, but it's now up to each bank to make a decision as to whether they change their own rules, because there aren't any rules to apply to them anymore. We've had two banks and one do a bit of a grey change. So two banks have made a change to say we'll do 80% on rental properties or investment properties now, not 70%. So it's a positive. And one bank said for strong applicants we'll do 80%. So it's a bit grey. And a couple of other banks, or 3 or 4 of the other banks, haven't moved as yet. So some positive moves there for investors. And again, those low interest rates mean if there's a good return per week in rent, they're possibly going to be positively cash flowed. So they're actually providing an income to the person who's bought the property. So the mortgage is paid, the running costs are paid, and there's still some money left over to pay back to the owner.
Excellent. Okay, thank you for that. Guys, I want to get into more specific about the Christchurch market and how it sits for availability for potential buyers and sellers. So we've got a couple of questions here which are pretty specific to the individuals, I think. So first one being, are there any Christchurch or Canterbury locations or suburbs looking really exciting right now? And why is that? So are there any key locations that you wanted to bring up tonight?
I think that's such a subjective question, Ollie, is what I find, and from experience, everyone has their own. I find that people that love the northwest area of Christchurch love being in the northwest. They're used to their community, the amenities that they have, their schools, their sports, the church, their work. So they stay on that side of the city more often than not. Southern side, Cashmere, Summerfield, Beckenham, they tend to look in and around that arc around the bottom of the hill, and then you've got the hillside. So I find people do tend to gravitate in the areas that they're used to. Schooling's always huge, so it comes down to what suits each individual. I mean, I could answer that from what we do see, and Bex can maybe answer, because we do probably have a bit of a mix across the city in different areas that we both tend to work in more regularly than not. But I think some of the southern side of the city that has some good potential that also buyers are seeing great potential with the likes of Sprayton, Hoonhay. You've got good sort of quality of property. They're a little bit older, perhaps some character, but great for people that are prepared to maybe find something to do a bit of work to. There's still a bit of scope that they can add some value for themselves. There's really good school zones. But I think in Christchurch, again, like many major centres, it comes down to school zones. And once you start looking to buy and you're factoring in school zones for your own family or even just for resale, there's one adage that comes up, which is location, location, location. It's people like those things. They're always going to go well. And if you can secure a good property in that, if you're prepared to roll up your sleeves, do some work, then it's going to perform well, especially as Simon showed. If you look at the long term, then that does well. The likes of Addington, we've seen some big increase post-earthquake and perhaps that property value, which has been talked about in Canterbury for decades. So yeah, there's some good areas there. Bex probably deals with a few areas as well that she's more familiar with.
Yeah, look, I think the Hoonhay area is one that I've seen that's really, really grown in the last probably 2 years, and into Hallswell, as you've got properties that are sort of aged population, the older parents downsizing, they've been in one house for a long time, the house is dated, the first home buyers are coming into the area, bringing some, growth and youth and energy, renovating these properties, and then adding some significant value. So that would be one area. Another area that we're seeing grow now is out east, not because I live there, but I think when the government moved the high schools out to North Beach, then it gave people in the area much more confidence. There's been quite a few rebuilds. It's been traditionally a cheap place to buy. Now not so much, but the lure of the beach and the forest is what's pulling a lot of young people out that way as well.
Yeah.
And then if you like new subdivisions, you've got Rolleston, you've got North Canterbury, Prestons, you've got so many, again, coming back to what an individual buyer is looking for, what they like. Are they looking for lifestyle? Do they want to do up a house, or do they just want to move in and enjoy?
Yeah. And that reminds me, Bex, you mentioned Christchurch being the hotspot for buying, as it's the cheapest, largest city in the country at the moment. So sounds like this is just reiterating that message, basically, right?
If you were to look at, properties in Christchurch and put a similar property in another city like Dunedin, Wellington, Auckland, it is big bang for your buck in the city.
Yeah.
And the growth, and we are a city under rebuild. And so our trajectory was going really nicely until COVID. There's only a small dip, and now it's off again in real estate. But I think with the new build of Christchurch, there'll be a lot of confidence coming in. We're seeing new businesses come back to the city, and I think it'll be a very attractive place to buy. It is, a very reasonable place to buy a property, that's for sure. And I think with, if we have a big growth in the next few years, that's when you can clip your ticket on your capital gains.
Yeah, it's proven it's the most affordable major centre in New Zealand. So
right.
Dunedin, Mosgiel has a higher average sale price than Christchurch.
Yeah.
So we've got some really good affordability across the city, across Canterbury in general. And so I think people see that as being attractive, and that's why there is the confidence with buyers to go and see Simon, to get pre-approved, to buy, and to come and see us at the open homes, and if they like it, work with us to help secure it.
Could I just add one more thing, that the city fringe is becoming very, very appealing as well. Close walk to town, Maribel, St Albans, Richmond, within the 4 avenues is becoming very sought after.
Yeah. And Simon, a couple of questions came through yesterday, actually, which basically, I guess, are almost the same. How to future-proof loans, investments, their mortgage, and basically, are there other options outside of non-bank lenders, for perhaps self-employed investors? Any advice you can give there?
So if I understand the question correctly, future-proofing your home loan, what we look at is what are interest rates likely to do. The biggest influence on your home loan is the cost of the money. The interest cost is the major cost of home ownership. You look at maintenance or doing a few things around the property, they won't be your major costs. It'll be the interest on your mortgage. So currently, very low rates. In terms of making decisions on the best loan structure, that comes down to individual circumstances. But personally, at the moment, I'd be looking to fix short term, maybe take it fixed for a year, because it's unlikely that we'll see rates increase, and then review again in a year's time. And in a year's time, you might have lower rates at that point. You can get on the back of those. Or if there is some inflation and some growth in the market, and it's predicted that rates might rise, then you might decide at that point to lock in for 2 or 3 years. Before rates start to push forward. So it's all about timing, it's about staying informed, and it really coming back to future proofing, again, goes back to my point that I made earlier. Although none of us can accurately predict the future, even for ourselves, if you've got concerns about your sustainable income, that's the future proofing. Don't buy now, wait until you're confident with your income. But if all your income and your personal position feels strong and sound, then there's no better time.
That probably brings us on to our final question. Just in the interest of time, I'll start wrapping up now. We still do have questions coming through. There's some that we haven't managed to answer. So I guess that's a good thing, because it means everyone is keen to hear from you guys. So as I mentioned earlier, I will make sure an email goes out where we'll get responses to that as well. And this webinar is being recorded, so I'll make sure it's emailed to everyone who registered as well. But I wanted to round up with one last question. So basically a quick fire from everyone. Simon, you've almost answered it, to be honest, but if I'm thinking of selling or buying, is now a good time, considering everything that's happening in the world? So Beck, I might start with you.
For me, Ollie, to start off, okay. Well, you look at it from 2 points of view, right? So at the moment, if I was, we're heading into the winter months, and Rebecca and Richard, I'm sure, will touch on this, but traditionally a slower period. People don't necessarily like to list their property. They're concerned the garden doesn't look as good, it's colder, and they might be worried about getting a premium price. At the moment, because we have a lack of supply and there's pent-up demand for property, I'd say there's now never a better time to get your house on the market. So therefore, I flip over to my customers, who are people who are buying, not selling generally, and they say, well, why would I buy now? Well, again, if you look at what's happening, if prices continue to rise, how are you going to know or time the perfect time to buy a house? If you are going to wait for the market to bottom out, if that ever happens, all those baby boomers and people who are cashed up will be waiting for that time as well. And when that happens, you're going to be competing with them again. You might miss out entirely, and it bounces again. So there's never really a right time. If you're looking to buy now, then you get into it. Interest rates are low. If you're first home buyers, get a couple of flatmates in to pay your mortgage for you. You'll have a very small payment personally in that case. You can top it up and get the debt down quickly while rates are low. So I think it's a good market for both people, but buyers at the moment, if we take it a snapshot right now, buyers need to be mindful that they won't necessarily get an absolute bargain. They'll be probably competing and have to pay a fair price, but sit in it long term, it's going to be a good investment.
Okay. Richard? Cool.
I was just going to say to Rebecca, can we actually say anything further to that? That's a fantastic answer, Simon. Yeah, I've said for a long time, and I think Simon's graph and the graph at the start really indicates that over time, there's something I've said for a long time: the best time to buy a property was yesterday, the next best time is today, and the worst time is tomorrow. That's not trying to be too tongue-in-cheek or too simplistic about it, but as you saw, that graph illustrates it. Again, it comes down to the timing that's right for you, for that buyer. If the time is right, you've got your deposit, you've been and seen Simon or the team there at Loan Market, absolutely, it's the right time to buy. For selling, again, as Simon touched on that, we probably deal with those two sides, but our initial client first off is the seller, and absolutely, there's no supply across New Zealand, but in Canterbury we're suffering really, really low supply, which is keeping the competition up, and it's keeping things moving very quickly, and also holding those prices really strong, if not actually starting to edge them up. So again, for the seller, yes, but most importantly, any market, buyer and seller meet in the middle, and people generally walk away really happily. So it is a good time to do both of those things.
Yeah, yes, I agree. And if I could talk to Dallas, hey Dallas, are we concerned that we're sort of 2 to 1 at the moment? We're selling twice as much as we're listing. Look, I think buyers or sellers have just come out of this thinking, what, who, how, what's just happened? What do we do? You know, we're 3 weeks out into the market. It's all very well for the media to wax lyrical about the doom and gloom and how that's going to be, but our reality is actually quite different. So sellers will naturally think they should sit on their hands and wait, but the market is here and now, and if they're bold and come on the market now, they're going to have better buyers than what they could potentially have in the future. We can only deal with today. We don't know what's going to happen in future. We know that we've got hot buyers. We know we're getting multiple offers. So we're sort of doubling our activity and spreading the word, and sellers are coming to market.
I think the one thing that we talked about today, didn't we, Bex, at one of our meetings, was for buyers and sellers, for us, the most important thing is, again, that media coverage that's not always accurate, fact versus fiction, if you will. Our big sort of saying within the group here at the moment is to be informed, not to be influenced. And that's where we can help. We can give you the actual data, graphs like Simon's got here, but live data of what's happening in New Zealand, in Christchurch right now, that buyers and sellers can then make the right informed decisions with, not just be influenced by a headline in the media, by an economist that predicts doomsday around the corner, because we're definitely not seeing that at all.
Yeah, that's a good segue onto what I want to talk about here. So I have just released the poll, and it looks like you're spot on. The majority are looking very confident. We've got 47 that are okay about their confidence levels in terms of buying and selling this year. 33% saying they're good, 17 very good, which is great. Only one person isn't looking too confident, but considering the numbers we've got on today, that's quite reassuring. And again, 47% of people online today are actually looking to buy or sell. So those numbers and the confidence levels, I think, honestly, from my perspective and looking at potentially buying for the first time this year, it was all doom and gloom, like we said, with the media and COVID hitting New Zealand. But yeah, it's definitely not the case from what I'm understanding here. So really good stuff. Thank you to everyone who did that poll just then. That's really great. So I'm just going to quickly round off. Simon, for someone like myself and my partner, why would we use a mortgage advisor?
Thanks, Ollie. Not a big one on self-promotion, but hey, thanks for the opportunity. Look, listen, mortgage advisors work for free 99% of the time. When I say that, there's the odd occasion where we do have to charge a fee, but that is very, very rare. So if we deal with one of the main retail banks here in New Zealand, there's no cost at all to our borrower. The bank pays us. So my role is to provide as much advice as I can along the lines of what we've talked about tonight, but more specifically to the individual circumstances of the borrower or borrowers. And the biggest, I guess, thing that we provide outside of our advice is access to all of the lenders in one spot. So if Bank One changes their policy tomorrow and you're with Bank One and you're in the middle of a transaction, what do? Well, you need someone to be advocating for you with that borrower, and they also need to be able to move you to a different lender very quickly if there becomes a problem. So time, convenience, advice, we negotiate, we navigate through all the difficult policies that are out there at the present time, and it doesn't cost you a cent. And so giving yourself the best chance of getting from the start to the finish without all the stress that you'll have to handle yourself.
Excellent. I'm probably biased, but you've sold me, so thanks for that.
So you have
Richard and Bex, Ray White, why would we come to you guys?
Perfect. We'll look after you. Oh, why would you come to us, guys? Beg your pardon. Look, I just think we're, as a brand, we embrace family values. We're about relationship building. We're about customer service. We're not about catch and kill. We're not aggressive. We're just people looking after people, and that's our mantra for our brand. Yeah.
It's about people. Yes, we deal and help people transact with property, but at the end of the day, it's all about the people that we interact with, looking after their interests, when we sell a property, we hope that we have the buyers come back to us in many years after many happy years at that property and use our services again and again and again, and refer friends and family. So it is about the people. It's a great company. It's the largest real estate company in Australasia, which I think can be a little bit lost here in Christchurch at some stage, but we're growing, we're coming. And look, we just pride ourselves on doing a great job for our clients, and the team here do that exceptionally well. So we just like helping people and achieve their real estate goals.
And we're not just about one thing, like we're quite diverse in terms of our networking. For example, every time we're showing properties, we're talking about Simon. We know we can trust Simon 100% to give the best advice, to care, and for it to help a first home buyer who really isn't sure what they're doing, to have Simon give them a call and say, hey, right, these are the steps, this is what you do, and to be a nice guy to boot, really takes away the fear factor of them getting into the property market. We know what we're doing, they don't, so they need trusted advisors.
Yeah,
Absolutely.
Okay, well, I think that just about wraps up everything for this evening. We are running out of time, and I know it's at least Netflix time, if not dinner for most people, so we'll wrap it up for this evening.
It's work time for us.
Yeah, exactly.
You're getting the phone now.
So as I mentioned at the start, we'll send around the recording. I know there's a couple of people who weren't able to attend tonight, so they will get this and then people can refer back to it. I'd also imagine in the future we'll run some similar webinars like this, and perhaps in a couple of months see how the market's looking again. And I know that you guys are constantly getting emails for updates, and as you mentioned, that's what we're about. So I think it'd be quite valuable to maybe do a couple of these in the future throughout the rest of the year. As the viewers can see, there's the contact details for everyone, so do feel free to reach out and have a chat with them. I know personally that these guys are extremely approachable, and as Bex just said, they know what they're doing, so make sure you do reach out. And really special thanks to you guys for spending your evening to talk to me, go through all these questions. Really appreciate it. And for me personally, it's been very informative, so thank you very much.
You're welcome. Thank you, Ollie.
Thanks, Ollie. Thanks for those that have watched. Yeah, thank you. Cheers.
All right. Have a good evening, everyone.